Good afternoon, good evening, and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for February 22nd, 2009. It's my mother's birthday. Happy birthday, Mom. AccendoTraders.com, effective video, technical analysis trading plans delivered daily. Each time we come together, we work on coming up with a trading plan for the next trading session. We want to make sure we're on the right side of our trades, know what's coming down the pipe that can affect our open positions. On the weekend, we add being able to see what the experts are saying. We want to look at the sectors and see if any trends are forming. We always look at the major indexes. We always scan for new trades, set alerts for new trades, and always want to make sure we have time to spend with our families. So, the week that was, all the major indexes were down for the week. All the sectors were down for the week. The major sectors were down for the week. And it certainly wasn't the government bounce that a lot of people were looking for. Although we did have a very detailed plan on Wednesday, it really didn't provide much bounce. So the question is, does anybody have a solution for the banks? Anybody? The week started off, we had a holiday shortened week, and Moody's started the week off with some concerns about the European banks. They said that the recession is emerging in Europe's economy, and it'll be more severe there than elsewhere. The market mainly consolidated after that. We opened up the week lower, and we consolidated on Wednesday and Thursday, and that was despite the announcement of the mortgage subsidy plan, the relief plan. And I guess, you know, it's affecting, the main thing about it is that it's for conforming loans. And they called it a trickle-up plan, that if we've helped the bottom, maybe the up will be helped. But, you know, there wasn't really a big rally off of that I think a lot of traders are looking for. And so you saw disappointment, you know, on Thursday and Friday where, you know, okay, if this wasn't going to be the catalyst. We always talk about what's going to be the catalyst, and if the government isn't going to provide it with clarity in the bank solution, there's not going to be too much that's going to move us higher. The rally that a lot of us were looking for did not happen. But again, you trade what the charts give you. The charts tell you to go down, you trade that. You can't hold your sentiment for more than a session. Heck, for more than just a morning. Economic data basically was negative for the week. Also on Tuesday, we had Empire Manufacturing at negative 34 versus negative 22. Housing starts reached the lowest since 1959. And we had hotter than expected inflation data. All that being said, again, the bank nationalization fears reemerged on Friday, which sent us lower. And although we rallied into the close off of some government talk, the government said that, a spokesperson said that they believe banks should be privately held. And the market rallied off of that. We did close almost to the bottom of our 2002 bear market. The 2002 bear market was 7186. So we're just a couple ticks off of the 2002 bear market close. That is the closing low, not the intraday low. So what do we have in store for this week? Not that much. We really don't have a lot of bang for the buck. Although a lot of people say every time Bernanke speaks, that sends the market down. So he's giving some report on Tuesday, but there's not really much going on. And the jobs information is not going to be, usually it's the last week of the month, but it's actually going to be next week. So not really light on economic data. We're also, as you can see here, light on earnings data. There's no real major company, maybe Home Depot. One thing you should notice, though, is that there's a lot of retail companies reporting next week. I've got up there Target, Macy's, Sears Holding. And maybe, you know, the traders will take some negative sentiment from that if all these retail companies are reporting bad numbers. So as we begin to look at our major indexes, the Dow, the NASDAQ, and S&P 500, you can see obviously we're in a downtrend. You can see what this last week did for us. If we were to shrink it out for you, you can see that the Dow has broken the November lows. The Dow has broken the November lows. However, if we switch over to the S&P 500, you can basically see that the S&P 500 came right on down to the November lows and kicked up from there. But what's more interesting is if we switch over here to the yearly, and you can see with the S&P 500 that we're basically at the 2002 lows of the 2002 bear market, getting ready to break that. So and we have a double top here. And if I switch over to the Dow, you can see that same thing. We've got the double top going on here, but likewise we are sitting at the lows. So that catalyst to move us higher, I don't know, but certainly we need to bounce here or look. This 50 really looks interesting if we don't bounce from here. As far as sectors, there's only 3 that really caught my eye. I'm still liking agriculture. We can draw our uptrend line here, bounce at the 50, holding strong. Think about what the market did as a whole and how agriculture held up here. Certainly like gold. Gold hit the $1,000 per ounce price level. But you can see our sector of gold is just consolidating here, so we really need to break out above 425. And Internet's probably the weakest of the 3, but I like the fact that if you draw an uptrend line, it looks like it could bounce here. And that's really the theme I saw for a lot of things. You can see, look, a lot of sectors are at points where, if you match things up, they really need to bounce from here. So I'm looking, again, the market needs to bounce here or look out. As we come to the education portion of our video, we're going to go back to basically what we've been talking about for so long, which is the mental association of the market in your mind. 2 weeks ago we talked about if you're on a streak of losing trades, maybe 2 or 3, when you see the next setup, your mind tends to associate that negative experience, and it begins to cloud your decision making on whether or not you should pull the trigger. Yet last week we talked about when we're on a winning series and we see our setup, not only does your mind now like it, but it allows you to be overconfident, and you tend to overload and buy way more contracts than what your trading plan actually states you should do. So what we have to do is what we've been talking about really as far as developing the right mindset of a trader. I mean, that's really been our theme, the right mindset. And if you can accept the fact that the market does not generate positive or negative information, but instead it's how your mind associates what it's seeing with past experience. I mean, that's what teaching is all about. We build on the foundation. What do you know? If you know that 5 plus 5 is 10, or 5 plus 5 plus 5 plus 5 plus 5 is 25, well, there's 5 5s, so 5 times 5 is 25. If we can build on your addition and show you how multiplication is faster, then you can understand it. Your mind does the same thing. It takes what it sees and associates it with what it knows, or more importantly, what you perceive to know. And it really can affect your trading. Again, going way back, Mark Douglas talks about the fact that that the mental patterns that cause traders to lose and make errors are so self-evident and deeply ingrained that it would never occur to us that the reason that we're not consistent and not a successful trader is because of the way we think. So developing the right state of mind, that state of mind that perceives opportunities in the market without fear, requires that you take control of the association. How does your mind associate what it's seeing with the past trades that you make? More importantly, it just requires you to be able to see the market. It's not negative, it's not positive, it's opportunity. And being able to pull the trigger when you see it. A good trade is one entered and exited regardless of the outcome, as long as it's based upon rules. So, as always, we want to thank everybody for watching. I know a lot of people stop right here as soon as they see this. But to get the full version, go to subscribe podcast at HTML. If you want to become a paid member and get our daily picks, remember our daily picks are new trades every day. Here are safe trades to get into for the next trading session. CenterTraders.com/video.html. There's our blog, which will have our full version, depending on what version you're looking at, the YouTube, Gathers, MySpaces. Those are our abbreviated version because we only have 10 minutes. Normally our videos are 20 to 30 minutes because, again, we go into detailed analysis of all of our trades. Keep going to Twitter. And I know I've been talking about it for a month, but We finally got all of our e-commerce processing fixed. There's a couple of people who signed up for our free trials that you're going to get an email from me this week because we finally have our back end working. And so this will be our last week. I'm also going to be sending an email out to everybody for a half price because we are raising prices on this weekend. My wife's birthday is Saturday. Okay, guys. Thanks. See you next time.